Okay, so in this video we're going to look at statement of financial position. Now there's three things that you need to know before you can work out statement of financial position, and that's that assets are things that you own, liabilities are things that you owe, and that net current assets is equal to current assets minus current liabilities. So let's get into this. So the first thing then, current assets. So if you look at the top, an asset that you want to keep for less than 1 year. A fixed asset is an asset that you want to keep for longer than 1 year. So generally a current asset will be things like cash in the bank or inventory or stock that you're going to sell within the next year. Your fixed assets are things like machinery and equipment that you're going to use to run your business, and it's not something that you're planning to sell. So current liabilities, remembering that liability is something that you owe, current liability is a liability that you'll pay off in the next year. So that's things like a credit card bill, which is a short-term lending solution, and debts owed to suppliers, because they're going to want to be paid generally within 30 days. So let's have a look at this then. So we're going to break down this table of assets and liabilities into current assets, fixed assets, and current liabilities. So IT equipment, that's something that we're going to keep for longer than 1 year. So that's going to be a fixed asset. And I'm just going to start by just writing FA, CA for current asset, or CL for current liability next to each of these. Cash in the bank, so that's money that we have in the bank. That's definitely an asset, but also it's one that's going to come and go within the next year. So I'm going to write current asset for that one. Farm equipment, like the IT equipment, we're going to keep that for a long time. So we're going to go with a fixed asset. Credit card bill, that's a current liability because we're going to pay it off in the next year. And debts owed to suppliers, they're going to want paying more than in less than a year. So that's a current liability as well. And finally, inventory or stock, that is going to be a current asset because that's something that we want to sell off within the next year. Imagine a shop that has stock left in there for longer than a year. It's not going to be very good for space in the shop, and it's also not going to be in date anymore, most likely. So just think about inventory, stock as things that you want to get rid of quickly. Okay, so net current assets then is what we're being asked to calculate for this question, so using the data from the table. So we know, because we've just characterised all of these different assets and liabilities as either fixed asset, current asset, or current liability, we know from the top here that net current assets is equal to current assets minus current liabilities. So what we need to do is first start by totaling up all of the current assets. So current assets, CA. So let's have a look down the list. So the first one we've got is cash in the bank. So the amount that we have for that is £8,000. So we've got 8,000. And then we're going to look for the next one. So the next current asset that we have is our stock or our inventory. So we're going to add on £800 here for that one. Again, that's the £800 from the pounds column there. So we've got a total current assets of 8,800. So that's all the current assets added together. So the next thing we need to work out then is our current liabilities. Let's just put the formula here. So net current assets, NCA, is equal to current assets minus current liabilities. So our current liabilities then are the £5,000 credit card bill and the £1,000 debts owed to suppliers. So what we're going to do now is we're going to add those together. So we've got £5,000 and we've got £1,000. So that's a total current liabilities of £6,000. So now all we need to do is follow this formula. So our net current assets is equal to our current assets minus our current liabilities, and that's going to give us £2,800. So for this one, we can ignore the fixed assets because we don't need them to calculate net current assets. So let's move on to the next one. So this one is asking us for total assets. See that there in the question. So what I'm going to do again is I'm just going to add together all of these that are assets. So in this one, we're only looking at assets, so we can ignore the liabilities for this one. So I've got £10,000, that's an asset. £8,000, that's an asset. Farm equipment, that's another fixed asset. Now this one, credit card bill, we can ignore because it's a liability. Debts owed to suppliers, we can ignore because it's a liability. And inventory, again, that's an asset because that's something we can sell for money, okay? So we've got £100,000 of fixed assets, which is our IT equipment and our farm equipment. And we've got £10,000 and £90,000 in that. So 90,000 of farm equipment plus £10,000 of IT equipment is going to give us £100,000 of fixed assets. And then we're going to have a look at our current assets. So our current assets, which is the other type of asset that we're looking at here, we know from the last question, if we scroll back up, we've already calculated that one as £8,800. That was £8,000 cash in the bank plus £800 of stock or inventory. So we've got £8,800. So what we're going to do is we're going to take our 100,000 of fixed assets and we're going to add on our 8,800 of current assets, and that is going to be equal to £108,000. Sorry, £108,800. And that will be our answer. So again, we've worked out their total assets, which is just a case of adding all of the assets together. So for the final one then, we're going to actually do a statement of financial position. So the first thing we need to do is work out our fixed assets. So we do that by just totaling up. You can see here, fixed assets is there. So we're trying to work out the total of all the different fixed assets that we have. So we know that we've got £405 inkjet printer, and we're going to add on £949 for the computer, and that's going to give us a total fixed assets of £1,354. Okay, so our total fixed assets, all the assets will be listed there. So the total fixed assets is £1,354. Now on the next one, we need to work out what figure needs to go here in the current assets. So debtors, that's the people that owe us money, owe the business money. So we need to work out how to get to this £1,005 total current assets figure. So what we need to do is we need to take £1,005 because we know that's the final result, and we need to knock off the figure that we've already got. So we've got £326. I'm going to write that on the screen so it keeps it, and that's going to be equal to £679. So we know now if we put £679 in the middle here, that if we added together all of the current assets, so 326 plus 679 is going to be equal to that £1,005 figure. Okay, so net current assets then. So we know from the last question that net current assets is equal to current assets minus current liabilities. So we've got our current liabilities here, and it's given us the total, £253, because there's only one current liability for this question, and that's creditors. So creditors are people that we owe money to. They've given us credit. And we know that our current assets are £1,005, because again, we've worked that out here. £1,005 is the current asset figure. So our net current assets is going to be £1,005. Let me just highlight these parts for you. £1,005 minus the current liabilities of £253. So let's just write that down. So £1,005 minus £253 of current liabilities is going to be equal to £752. So we've got £752 net current assets. Okay, so we know we need to do one more calculation to get our final mark on this question. Again, it's this one here, and we're trying to work out what the net assets are. So to work out the net assets, we just need to add together total fixed assets of 1,354, and we're going to add on the net current assets. So we've got our total assets here, total fixed assets, sorry, and we're going to add on our net current assets. Now the reason for that is that we've already knocked off the current liabilities, so we know that they're already accounted for here. So just to work out the net assets at the end, you just need to add together the total assets and the net current assets. So that's going to give us a figure of £2,106. And that's how you do statement of financial position.